Welcome and thank you for being a listener of the Dose of Leadership podcast. Currently, we're expanding the conversations beyond just leadership into health, wealth, purpose, spirituality, relationships, and much, much more, because today's leader has to be about all of these areas to lead into the future. Hi, I'm Matt Lilly, and I'm the new host of the previous Dose of Leadership podcast, now called BriteVibe. I've owned 20 businesses over the last 30 years, and I've studied business, wealth, health, strength, spirituality, you name it, I've studied it, and I've learned that you have to grow in all these areas to be the best, well-rounded leader that you can be, not just at office, but also at home. We have an impressive lineup of speakers coming soon, so please stay tuned to the podcast. Thank you for being a listener and part of our Dose of Leadership community. And now we welcome and are excited to have you be a part of our BriteVibe podcast community. Well, Tom Wheelwright, CPA and CEO of Wealth Ability, welcome to the show today. So happy to have you on.
Thanks so much to be with you today.
Yeah, exciting stuff that you're going to talk about today, and exciting meaning that you're going to make it exciting. I think most of us probably think of taxes and, you know, as like, what do they say? You doing your taxes in the dentist is kind of an equal par for things that you want to do on any given day. But you're going to make it fun and exciting today. That is my challenge and also my wish, because I think that
I promise we will do that.
Okay, perfect. So what exactly is Wealth Ability? You're the CEO of Wealth Ability. What exactly is that?
I am. So I've spent 40 years in the CPA profession. Mm-hmm. I spent 7 years with Ernst & Young, 3 years in their national office, 4 years as in-house tax advisor for a Fortune 1000 company. I spent 14 years as an adjunct professor in the Masters of Tax program at Arizona State University, 25 years buying, building, selling CPA firms. The last 15 years, spent a lot of time traveling the world with Robert Kiyosaki of Rich Dad Poor Dad fame.
Yeah, of course.
Speaking to millions of people around the world. And recently, about 5 years ago, we started a network of CPAs. The most common question I got when I was traveling with Robert is, how do I find somebody like you here?
Right, yeah.
And so what we decided is, well, since we have a completely unique view of how the taxes work and how your CPA should work, we decided, well, we'll just build a network and we'll train other CPAs. So that's what we do now, is we train other CPAs how to do what we do.
Very cool. And for people that are listening to the show, you've just turned it on, you're listening to the show right now, know that this isn't, again, as I was teasing earlier, but this isn't going to be a dry podcast about taxation and line 41 and then, you know, this form. This isn't what we're talking about today. This is rethinking of what we do, you know, here on the podcast is kind of rethinking and reshaping the way our mind thinks about certain things. And specifically with taxation, if you don't do it right, it can cost you literally hundreds of thousands, if not millions of dollars over your lifetime that you wouldn't normally, am I saying that correctly, that you wouldn't normally have to pay if you were more versed or more educated or worked with somebody like yourself? Well,
the reality is, if you think about, okay, unlike a financial planner who typically thinks about what do you need in order to retire and not live under a bridge, right? And you think about what would you really like, right? When would you like to retire? You can't get there and pay high taxes. It is mathematically impossible. The good news is government in the US and around the world have made it easy actually to not pay taxes and to do so legally. So I love your whole concept, Matt, about we want to give this positive vibe and this real positive energy. And really that's the way I look at taxes, is taxes are really primarily a series of incentives. And they're basically, if you understand how taxes actually work, it's really a roadmap to reducing your taxes. The government's not really out to get you. The government, basically, here's what happens, Matt. So the government says, look, you have a choice. Either you can be a passive partner and you can pay a lot of taxes, or you can actively invest the way we want you to invest and not pay any taxes, but you get to choose.
That's a very interesting, the way you phrase that. And again, this is kind of the reshaping. This is why we do the podcast. This is why we bring on unique guests, is because the way you phrase that, passive versus active, and kind of working with the tax code to invest, to grow wealth, it's not, as you said, it's not that the government's out to get you. It's kind of, here's the game and here's how to, more like here's how to play the game. if you want to be wealthy over time.
There's no question it's a game. Here's the thing, though. We don't get to choose whether we're in the game or not.
We are in the game, right?
We are in the game, right? Anybody that looks at their paycheck and says, who's FICA, knows that you're in the game, right?
Right.
And then on top of that, we don't get to choose the rules of the game. The government gets to choose the rules. Plus, the government has the referees, the judges, the jury, the executioner. They've got everybody.
Now you're starting to sound like the government's against us again.
Well, okay, let me be clear. Congress is our friend. The IRS is our enemy. Okay.
Oh, wow.
Don't confuse the two. Okay.
All right.
IRS is definitely your enemy,
but IRS
Congress is our friend. That's
great.
Correct.
And to be clear, this is Tom Wheelwright saying this, not Matt Lilly, because I do not want auditors to show up on my door and say, "Hey, on your show, you said that." So
it's funny. You talk about taxes and dentistry in the same vein, right?
Yeah.
I'm going, that they used to say that the profession with the highest level of suicide was dentistry, right?
Right. Yeah, that's right. I did hear that.
But it used to be the case,
yeah.
right?
Which is weird.
Can you imagine? Nobody wants to go to the dentist.
Oh, I guess.
Right? But think about this. Think about you're in a business where your best customers hate you. They don't want to see you. They never want to hear from you. That's what it's like to be an IRS auditor. So just give them a little space here. Right, IRS auditors are not bad people most of the time. They're just trying to do a difficult job. It's just that they are not on your side. They are not, they're trying to get more money for the government. That is their job, right? So they're the other side. They're the prosecution, you're the defense. Got to think of it that way. You're always the defense, they're the prosecution. But here's the other thing is that with the IRS, unlike most places, you're guilty until you prove yourself innocent. So that's actually the way the tax law works. And it is legitimately the way the tax law works. But the good news is once you understand that, look, as long as I'm doing what the government really wants me to do, I can pay as little tax as I want. I have many clients who pay little to no tax, but it's not because they've got sophisticated tax strategies, things like that. It's because basically the government said, you do this, this, and this, and we'll give you a tax break. And they do this, this, and this, and they get the tax break. It's no different than the person, you take a buyer versus a renter. Okay. Right. A buyer of a house gets a deduction for their interest expense. Renters don't get deductions for their rent.
Fair enough. Yeah.
So that's just an incentive to buy a house.
For you to own. So let's talk about, since you brought that up, let's talk about then what does the game, to play the game and win, how has the government set it up? What are things that people should be thinking about doing if they want to pay little to no tax? Which I think everybody wants to pay little to no tax, right? Nobody's like, oh, I want to write a big check, or 30% I want to write 30% of my income and just pay it to somewhere that I have no idea if it's working or not, right? So what are some, start us off.
I'll make it real simple for you.
Okay, perfect. Okay? I love that because I'm not sometimes very bright, even though
the more money you earn, the more tax you pay.
Yeah.
The more assets you buy, the less tax you pay. Okay, so here's what happens in our tax system. If you spend money, the money you earn, if you spend it or if you save it, you get taxed on it.
Right.
But if you invest it, you don't get taxed on it. So, for example, if you take the money you earn in your podcast business and you put it into an investment the government likes, like, renewable energy, you won't pay tax on that money. You take the money you earn in your business, you reinvest it back in your business. Everybody knows you get a business deduction, right? So you're not going to pay tax on that income to the extent you put it back into your business.
Right.
So all you have to look at is, where does the government want me to put my money? Put your money there, build assets, don't build liabilities like cars and houses and stuff like that, but actually build assets that produce cash flow. And as long as you're buying assets that the government wants you to buy, like housing, like particularly rental housing, right? Mm-hmm. If you buy a house for yourself, you get a little deduction, but if you buy a 200 unit apartment complex, you get a lot bigger tax benefit. So it's how many people am I helping? And the more people I help, the better the tax situation.
Oh, that's a great way to look at that. I have been in real estate a long time and have owned real estate and bought and sold rental houses and all that throughout my career. And at one point, it was fun for me. I used to measure success by how many toilets I owned. I literally had a running count of how many toilets that I owned. I don't know why, but I just I quantified it. And one day I was like, I own like 56 toilets. Like there's 56 bathrooms that I own. Between commercial buildings and residential and all that. And I don't know why, but I just thought for several years of my life, that was how I measured success. I thought, why not make it fun, right? So real estate's obviously, real estate, commercial, residential that you're renting, leasing to other people, right? So there's some tax advantages there, like I'm assuming through depreciation. You get to write off the interest, you get to write off depreciation, repairs, things of that nature, right?
Right. I mean, so really people always ask me, so tell me, is this, give me a list of deductions. I'm going, everything's deductible. The question is, how do I make it deductible? So, if you're asking if you're asking your accountant, is this deductible? You're asking the wrong question. Ask your accountant, how do I make it deductible? So if you're taking a trip, for example, that trip could be considered a personal trip or it can be considered a business trip. There are very specific rules for it. So I can actually walk you through as how do I make that trip deductible? Well, then you can choose. Right. I mean, my goal is to give people a choice. That's the reason I write my books. That's the reason I do my podcast. That's the reason I do Wealthability has our network, is we're trying to get people a choice. Either do what the government wants to do, pay little tax, or be a passive player in the tax game and pay high tax. It's your choice.
Right. And this just so, and everything you talk about isn't just for people who are already wealthy. They're people who want to grow wealth, right?
Well, in fact, wouldn't you rather not pay tax ever? Right. Right? I mean, it's always better to learn before you have high income than after you have high income, because after you have high income, you've already paid a whole boatload of taxes.
Right. Yep. As you're growing that wealth.
Yep.
And so what's the number one thing, what's the number one area that you tell, I mean, if somebody's just starting out, so people listening right now are viewing it on YouTube. So what's the number one thing you would say, here's what you need to do first? Is one probably is education, but then what would be kind of the anchor or the cornerstone, or kind of what would you want people to know, the maybe two or three things right up front if they're just starting out? So let's assume that they have a job, they get a W-2, they haven't invested in anything maybe other than their retirement plan. What's kind of that next thing?
Well, the first thing I'd ask myself is, what do I want to do with my money, right? Because there are lots of different tax incentives, and you don't want the tax tail to wag the investment dog. So the first thing you say is, well, do I want to put my money in the stock market? If so, then you should be putting it to your retirement plan, because that's the best bet you've got from a tax standpoint, is go to your 401k, a pension plan, profit sharing plan, whatever, right? But let's say, let's say, okay, or you want to invest in real estate. Okay, well, you don't want to do that through a pension plan. That's it. You want to do that differently. Or let's say I want to invest in oil and gas or renewable energy. Okay, well, you're going to invest there a different way. So what you have to look at is, what do I want to invest in? And then what's the most tax effective way to invest that money, not just to prevent getting taxed on the income from that investment, but to actually reduce your overall taxes, because the active investor doesn't just not pay taxes on their investment income, they also don't pay taxes on their earned income.
Right. Okay. And what's that mean? And how does that work?
Well, so for example, take your business. The very first thing I tell somebody, boy, I really want to reduce my taxes, start a business. The government will literally pay you to start a business.
No, wait. What's that mean? Now you got me on another tangent. What do you mean the government will pay you to start a business? Because I've heard that before, and I've been in business a long time. And the government's, well, except for the COVID money, the government's never written me a check to start a business. So I'm uneducated.
Okay, well, so let's get a little education. So in my new book, The Win-Win Wealth Strategy, I talk about 7 investments the government will pay you to make. And one of those is a business. What happens is, let's say you start a business on the side out of your home, okay? So you've got a lot of expenses that you have, whether or not you have a business or not. You have your car, you have your house, you have your living room, whatever, right? But when you turn those into business assets, so you turn your car into business asset, so you're using it mostly for business. You turn your house into a business asset, or at least a home office. You turn, right? When you start doing that, what you do is the government, I actually run these numbers in my book. So the government, actually, you get more tax benefits than the cost of setting up the business. So the government will literally pay you to set up a business.
And pay you through tax incentives or?
Pay you through tax incentives, pay you through lower taxes on your wages that you're earning at your day job. So remember, let's say you're making $100,000 at your day job.
Okay.
And you're paying income taxes, right?
Right. Got it.
But let's say you start a business and you get deductions in your business. So you actually show a loss in your business. So you show a $5,000 loss in your business. So now your combined income is not $100,000, it's $95,000.
Right.
So now you actually pay less taxes on your job than you would have if you didn't have the business. Well, the tax incentives are high enough when you start a business in your home that literally the cost of starting the business is less than the actual tax benefit that you receive against your regular income.
Interesting.
Yeah, it's fascinating.
Yeah. And so it sounds like one of the first steps is you could just start a business. I think they call it, I don't really like the name, but they call it a side hustle. To me, that sounds dirty, but they call it a side hustle. So you have the, right? First time I heard that, I was like, side hustle. What is this? Like, is that even legal in the States? Is this some type of like, but so you start this side hustle, you start a business, a part-time, whatever business doing whatever, selling
whatever.
services,
Let's say you sell products, you sell product on Amazon, or it's never been so easy to start a business. All you need is a laptop, right?
And typically, are you advising people put that inside an LLC or something so that it's separate, or versus running it right through their personal stuff?
I do because I think you ought to start it right from the beginning.
Yeah, exactly.
Right, because the idea of the business, the goal of business is not to reduce your taxes. The goal of business is to make money.
Right, exactly.
Right? So, the government's going to pay you to do that. You're actually going to make more money because of the government tax incentives.
Right.
But remember that the whole goal is to actually make that side hustle your primary hustle.
Right.
I mean, that, for the most part, for most people, that's their real goal there. And if you do that, then you start doing everything, you do it all the right way. The government actually encourages that. So, for example, in order to deduct a business expense, it has to have a business purpose, has to be ordinary, means it's typical, and has to be necessary, meaning it's profitable, and you have to document it. But if you think about those four tasks, if you did that with every dollar you spent, you'd make more money. Because you would only spend money that made more profitable. I always tell people that the purpose of an expense in a business is to create income. If that expense doesn't create income, you shouldn't be spending the money.
Right.
So the tax law is really more than just a guide to reduce your taxes. It's actually a guide to build wealth. It's an amazing guide for building wealth.
And that's interesting because I've never heard that before. I've never thought of it in that way, that literally if you're following the tax code, it's actually almost like a to-do manual for how to build wealth, as far as...
No question.
Here's the places, and you list some on your site, like business, real estate, technology, R&D, sustainable energy, insurance, agriculture, retirement savings. So these are ways that you're able to, I'm assuming these are the ways that you build wealth, or the areas that you specialize in. So that would be the first step, is just starting some business with the intention that you're going to make money. It's not just for the taxation side of it. But I always thought, I've been an entrepreneur since I was, I think, 19. And so I've always been self-employed or 1099 income. And I realized very quickly just the thing you talked about, which is basically my buying power is a lot greater than somebody who doesn't have a business, because if I can't, like my vehicle, that's an easy one, right? My car, I think 90% of that, 85, 90% I write off. Well, so I'm using pre-tax dollars in essence, right? I've got 30% more buying power.
Well, so think about this. So 2 years of COVID, right? Yeah. Everybody's working out of their home office. Exactly. Those who are working out and doing their own business are getting to deduct that home office. Those who are working for an employer aren't.
Right, exactly. And I think, this whole, to bring it into our current times, this whole, the Great Resignation, is what they're calling it. I mean, I don't think there's ever been, and I don't know, I've only been alive as long as I've been alive, but I don't know that there's ever been a time where it seems like that working as a contractor or working for, when I say for yourself, you're working, you're still working for other people. I've never worked for myself. I mean, you're right. You're providing services for other people, or you're not getting paid.
Unless you're a day trader in the stock market, you're working for somebody else. Correct.
But I think there's never been a more advantageous time to to start a business like this as far as culturally? I mean, it's not just, I remember when when I first started in business, you had to have an office and you had to have somebody answer the phone, and then it was like you had to have the fax number, right, back in the day, and you had to have the cell, and so to seem professional. And now, I could be sitting here on the podcast talking to you in my boxer shorts and nobody would ever know, and it's complete. I mean, it was just, there's my dog, I'll be on a Zoom call and the dog comes in. It's just more acceptable to work from home. Nobody has receptionists and all. I mean, it's all done over the internet and cell phones and all that fun stuff. So I think it's just such an amazing opportunity right now to work for yourself, I guess.
Oh, there's no question that there are so few barriers to entry.
Right.
And so it's inexpensive. It's easy. You can learn how to run a business basically on the internet.
Right.
Right. I mean, it's just, and you can make money actually just generating an audience. You make money.
Right.
So it's just never been easier. I don't know why everybody doesn't. Well, I do know why, but the thing is that the government, the tax law's fair, Matt. The tax law's fair. Everybody who does the same thing gets the same benefit.
Right. And I was going to interject and say, well, I don't think the tax law is fair because I think actually it benefits people that are, to your point, more active. But to your point, what you just said, if you are become active, then it's fair, right? It's fair, meaning you can get the same tax benefits as somebody else. There's no, but you have. Well,
everybody has the same opportunity.
Right,
so,
exactly.
For example, you have two employees and one contributes to a 401k and one doesn't. Well, the one who doesn't get a tax benefit. Right. So does that make the tax law unfair?
No, exactly.
Nobody's going to argue the tax law is unfair because one person contributes to 401k and one doesn't. Right. So why is the tax law unfair if one person starts a business and one person doesn't? What's the difference?
And we've talked about it on the show before, but that's really taking control and having a plan, right? Taking control of your life and having a plan versus just being, to your point, I really like how you framed that you're being kind of passive. You're going to pay more if you're passive because you're not even actively involved. So the worst thing you could do from a tax standpoint is just pay the tax and not think about it and just let it siphon off your money, right?
Well, yeah, but think about from an investing standpoint. So passive investors have the same problem. Mm-hmm. Right. So if you sit around and you invest in an ETF or, a mutual fund or something, you're going to get maybe some small rate of return, but you're going to be subject to the ups and downs of the market, right?
Right.
But if you go out and create your own real estate, you create your own business, you're going to get a much higher return on your investment. Right. So active participants in society always do better than passive participants.
Right. Makes complete sense, right? And like anything else in your life, you're not going to lose weight unless you're actively involved in losing weight. You're not going to have better health unless you're actively involved in your health. It's all about awareness and education. And I also want to state that you kind of take people step by step through. So it's not I think for a lot of people, why they don't start this stuff is it seems overwhelming, or they're just, how do I start, or where do I start, right? And so I think that's the thing I liked about what I read about your stuff is it's more of kind of talking to somebody like myself or like other people that that maybe, you've done it all your life, but I've done other things all my life. I mean, I've been involved in real estate and things like that. But how do you learn this stuff? And that's what you're making available through the stuff you do, right? Your books.
Well, that's the whole idea. The big question in the last couple of years has been, why don't the rich pay taxes, right? This has been a big topic of discussion. And I'm going, well, the rich have very sophisticated tax advisors like me. Mm-hmm. I mean, my clients are all rich, okay?
Right.
Okay, they're all rich and they don't pay tax. Okay, so I'm kind of the prototype here.
So again, if the IRS is listening to this, talk to Tom, because I'm not saying so. But I like how you matter of factly say this. All of your clients are rich and none of them pay tax. Is that what you just said?
Well, not none of them pay tax, but they all pay less tax than they would have otherwise. Okay.
Yeah.
So they still have their choices to how much tax they pay.
Got it.
How active they are, basically.
Right. Yep.
How low do you want your taxes to go? Some people want to go to zero. I've got clients who absolutely never want to pay tax. We can get them to zero. I have others that say, if I can get to a 20% tax rate, I'm good.
Interesting.
Okay? So that's fine. That's actually our first target is 20%. But my point is that, okay, so the rich people, they don't pay tax because they have really good tax advisors and they do a lot of investing.
Right.
Okay, that's natural for them, right? That's why they're rich in the first place. But the average person doesn't have this information. And this is why I spend my life speaking around the world. This is why I write books. This is why I wrote Tax-Free Wealth and now Win-Win Wealth, is that the idea is that anybody can do it. It's not that hard. And you do need a tax advisor. You do need somebody who understands this. I will tell you that I've had a number of people tell me that they give my books to their tax advisor. I'm going, that's great. I mean, you should read them yourself. They're actually meant for the general public. They're not meant for tax advisors.
Right.
But most tax advisors, I've never had a tax advisor read my book and say, no, that's incorrect.
Huh,
okay, they'll all say, well, of course it works that way. Okay, great, but you're not making it accessible to anybody other than your clients. So let's make it accessible to the whole world.
Got it. And when you say tax advisor, are you talking about somebody who's preparing somebody's taxes, like a tax accountant?
A CPA.
CPA, right. So this is somebody you're taking, if you have your taxes done, you're taking it. Right. And then you, I think you mentioned earlier in the show, but you've built out a network of people that you kind of have imparted this information to, or kind of trained, or what's the?
I continually train them. We have a network of 55 CPA firms around the U.S.
Okay.
And it's called the Wealthability Network. And people who come to us, we place them with the appropriate CPA. Mm-hmm. We actually make the determination, mm-hmm. and we get them started off right to make sure they're creating a tax strategy, make sure they're getting their plan started. So we kind of give them a head start, mm-hmm. and then we get them to the right CPA who we train on a regular basis. Yeah,
that's interesting because I've had my taxes have never been simple because I am self-employed, right? So I've always had itemized tax returns, but I don't remember ever having a strategy where I was proactive. Usually it was at the end of the year, I kind of came in and said, okay, here's everything I did this year. And then how do we figure that out, right? And they'd be like, well, how many new companies, how many new LLCs? They kind of walk through it. And so it was very reactive versus being proactive.
You're looking behind. You're looking behind instead of ahead, right? That's the problem. So, for example, with my clients, so I do have a small CPA firm as well, Wheelwright Manahan. And with my CPA firm, when we work with a client, we actually charge them a monthly fee,
right?
And we do planning all year long.
So it's a consulting kind of a.
It's very much consultation. Yeah, we do their tax return because that's an important part of the planning process. But we're really looking at. We start planning in January and we don't finish until December.
Interesting. That's a really cool strategy. And so how do people find out about these firms again? Where do they go?
Wealthability.com.
Wealthability.com. Fairly simple.
Yep.
Wealthability.com.
Really simple.
And then that's how they would be able to source. And when we talk about, so for somebody new, I mean, that's just starting out in this, kind of what's the cost or what's a range? Do you have kind of a range there for them?
You know what? It depends on what they want, what they need. So, our job on the intake standpoint is to find out what do you need.
Right.
Right. So we'll have somewhere between, typically about we'll have several hundred appointments a week with people.
Wow.
Yeah. So there's a lot of demand for what we do because we are the only ones who do it.
Right.
Okay. So we'll have a lot of conversations with people and we're trying to help them get to the right place. And if we can help them, we will. If we can't do it for you. So there are some CPAs like your CPA you were talking about who basically said, bring me the stuff and I'll just do it. Mm-hmm. Well, we don't do that. Okay. Right. So we do it with you, not for you. And so if you're willing to be active, again, if you're willing to be an active participant, we're a great place to be. If you want to be a passive participant, we're a terrible place to be.
Right, exactly.
So we're just looking for the active players.
Right. If you get a W-2 and you just need somebody to do your taxes, you can probably do them yourself. But that's not what you do. We're talking about wealth building, wealth strategies.
Correct.
But I'm assuming that's at every. I mean, I did get some good advice early on when I just started out. Like one of the first things that this CPA firm recommended was they said, well, you need to do an S corporation. And here's why you need to do an S corporation. So I did get good advice throughout the years. It wasn't like I was sitting down though going, okay, here's what I want to accomplish, or here's what
that's what we do.
Right. Here's what I'm thinking for this year and what do I need to how do I need to weigh those options? So I really like that. Well, and the drama triangle and the empowerment dynamic, another one of our, are you familiar with that at all, Ted?
I'm not, but it sounds great.
It is. It's all about kind of the different roles we play, but ultimately the antidote to drama is focusing on your outcome, right? So what do you truly, what do you want? And it sounds like that's a lot of what you're doing is saying, okay, let's be proactive and think, okay, what do we want? And then it's easier to work back to a solution versus going, well, I think I want this or whatever, and that's just too wishy-washy, right?
We're actually a little odd for CPAs because we actually start with helping you develop your dream. What do you, I mean, in a perfect world, what does it look like? I mean, literally all the money you could ever want. What does your life look like?
Right.
And let's actually shoot for that. Let's not say, well, okay, now we're going to back off that by 70%. No, we're going to say, you want that house on the beach in Maui? Great. Okay, we can do that. Okay, now here's what you have to do. And our job is to tell you what you need to do to get there. That's our job.
So where does this intersect then with like a wealth manager then, or an investment manager?
So we have our
now you said nothing is out of bounds before the thing. So I'm just I'm okay.
No, this is all good.
Because I'm trying to understand.
So let me tell you, our goal for the world is to provide tools, et cetera, and the people so that everybody around the world could be independent of employers, independent of the government, and independent of Wall Street.
Interesting. Okay.
So investment advisors are for Wall Street.
And when you say independent of wealth advisors?
No, independent of Wall Street.
Okay. Like not investing in
stocks. So in other words,
bonds.
don't be dependent on what happens in the stock market.
There you go.
For whether you're going to be able to retire or not. Why would? Because that's a very passive investment.
Right.
Okay.
That's like
take control of your life. Take control. You shouldn't have to be reliant on an employer. Right. Remember, if you have an employer, you have one customer. So you're in the riskiest possible situation in business is to have a single customer. And if you're an employee, you have one customer.
I love it. I love the way.
Okay.
I just love the way you phrase things because I think it just so it's like hits the nail on the head because I haven't actually phrased it that way. When you say it though, so often I've talked to people and they're like, well, I want to be secure. I want to make sure I have a good job and I want to make sure I can pay and all this stuff. But it's like,
how is a job secure?
Right, exactly. Because you can get laid off, fired. I mean, I talked to a guy the other day. He'd been working for the same firm for like 17 years and they just eliminated his territory.
Yeah.
They didn't even fire him. He was just like, we're not going to sell our product in that area anymore because we're just not getting enough lift in there. And so he literally, after 17 years where he felt like he was going to be forever, just gone. And I've talked to several guests that have come on the show that the reason they wrote the book, the reason they started consulting, the reason they did whatever is because they got laid off, right? And it wasn't that they were doing a bad job or that they got fired. It was literally like downsizing, right? And or just
when I was at the Fortune 1000 company, my very first task was to lay off half of my staff. The very first thing they had me do, it was a big layoff. I was the only employee. There were 10,000 employees company-wide, and I was the only employee hired in 6 months, within a 6-month time frame.
Right.
And the very first thing they told me was, now you have to reduce half your staff. And I'm going, okay, so that's the point I got right then is that, wow, you have no security as an employee.
Right.
No control over your future. I'm the youngest of 6 kids, so I like being in control because I never was. Right, as a kid.
Right.
I had 5 siblings. I got the hand-me-downs. I had hand-me-downs from my cousins. Right. So I like being. I do. I like being in control of my life. But the thing is, everybody can do this if they want to. It's not that difficult. You just need other people to help you. You can't do it yourself. You really do need other people to help.
Right. And ultimately, when you are hiring somebody like this, you're investing in the long. I think the employee mindset is, well, this is going to cost me money, or this is, I'm gonna, and it's like, no, if you invest, it's actually going to make you money, right? If somebody hires somebody like you, that's because they're going to make more. You are going to make them more than what your cost is ever going to be.
Yeah, let me tell you my view of the difference between the rich and the middle class. Mm-hmm. So the middle class looks at every dollar they spend as an expense, and they're trying to reduce their expenses.
Right.
The rich look at every dollar they spend as an investment, and they're trying to maximize their investment. And it's just a different mindset. It's the same dollars.
And how do people shift? How do people shift that mindset? I mean, what's the best way to kind of shift that? I mean, obviously what you said, but kind of what's the shift?
Be around different people.
Oh, I love that.
It's your environment. You can't. I have a good friend who his company does drug and alcohol rehab for veterans and first responders, Warriors Heart in Texas. And he said, he's told me multiple times, he says, you cannot overcome your environment. You just can't. So what you have to do is you need to get a different environment. So you have to be around different people, right? This is why people come to your podcast, because they want to be with different people like you, right? That's why they come. And so that's why the people, come, buy my books or come to our networks, because they want to be with a different type of CPA, or they want to be around other people that have this mindset that, look, life is possible.
Right.
And it can be a lot of fun on the road, and it can be a lot of fun getting there.
It reminded me, we had Dan Buettner, who wrote the Blue Zones and studied longevity, right? And so, and I'm a big fan of his work and have been for a long time. We had him on the show, and one of the first questions I asked him, I said, if I want to, because it's all about, he's all about longevity and living healthy. And I said, if I wanted to live longer and healthier, what's the number one thing I could do? And he paused. It was funny because I remember him pausing, or at least it seemed like he paused. I need to go back and watch the film. But he paused like he didn't want to answer it for half a second. It was kind of like, should I say this, right? And he said, and he just looked at me, and I was surprised. Dan is very straightforward and very matter of fact. He looked at me and said, the number one thing you can do is move. Just move. And I was like, and I think it speaks to exactly what you're talking about, which is, even if you don't physically move, because he was saying you physically move to be around people who are living longer, healthier, more active lifestyles. That's how you, and that's kind of what I'm hearing you say. Even if you don't physically move, move where you spend your time mentally, your conversations.
But I will tell you, my own story. So I was living in a good little middle class neighborhood in Tempe, Arizona. And what I noticed was the people my neighbors, they were always talking about money, and they were worried about money, et cetera. And then I kind of drifted towards the neighborhood to the south, just a mile or two south. And I found out these were richer people, had a lot more money. They never talked about money. Money was not important to them. It was not on their radar. And I'm going, so I don't want to be with these people that I'm with. So I literally sold my house and moved into the other neighborhood for this exact purpose, because I wanted to be with people who had a different view of money.
Interesting. And I think and really we could apply that to any area of life. If you want to have success in any area of life, then you need to be around people that are having success, the success you want. And I mean, that's what Tony Robbins, I've been to a lot of his stuff and met him and studied with him. And he's an awesome teacher, but he talks about that. The number one thing you can do if you want success in any of your area of your life is be around people that are already having the success that you want, and learn from them, right? Be a sponge, right? And just soak it up. So this is kind of the same thing. If you want to, here with what we do, a lot of it is exposing people to new ideas, to new thoughts, because how do we get out of our own way, right? If we aren't going to necessarily pick up and move neighborhoods, but how do we get out of our own way? How do we learn new things? And I think it's having, joining these conversations, coming into conversations with people like you about, hey, because I'm learning a ton on the show. I actually selfishly just do the show for me, honestly, because I learn a ton.
I understand that.
It's like I have, 3, 4, 5 guests on sometimes a week, and I'm just like, at the end of the week, I'm like, wow, I just feel so motivated and inspired, because when you're around people that are really good at what they do and really passionate about what they do, it's so contagious, right? And I think, and to your point about not working for employers anymore, but really looking at how do you at least work for yourself or have something that is more security for you long term. I think that's just so inspiring. And how do we inspire other people to kind of wake up to their purpose, right? Wake up to because when we're living purposefully, we're typically happy. And I think you're going to come on our Global Happiness Summit. I think that's what I heard the other day, right? So you're going to come speak at our Global Happiness. I hope you do, because I hope it's something about like how to, happiness and wealth, or wealth and happiness, or something, right? Because I feel because when you're telling me this, I feel inspired just listening to you, because I'm like, okay, I'm looking at my own life going, I feel happier about what what I'm hearing, just because you're helping my brain reframe it. I don't know why I'm running on about that, but I do really appreciate what you're doing. Now, you've been associated with Robert Kiyosaki. It says you're his trusted personal accountant and business partner. And so, because obviously a lot of this sounds like what he writes in his books as well, right?
Sure. And we're very copacetic with each other. We're actually a really good team when we speak together.
I bet.
on stage.
Right, because he's talking about the business side, and you're talking kind of about the tax strategy and wealth creation, I'm assuming, right? So a lot of the same stuff. And so you've got books out. You've got the Wealthability System. So that's different, though. What's the Wealthability System?
Well, so that's just our system for, like we were talking about, when we bring a new client in, we've got a system for helping them devise their strategy for building wealth and reducing their taxes. So that's our system for doing that. No book on that yet. Actually, the closest thing would be my new book, The Win-Win Wealth Strategy. But we do have, it is very important when you talk about who should you associate with. When you're talking about your advisors, you don't want an advisor that is kind of too independent. You want to make sure they have a system. Right. How are they taking their clients through? While it's got to be unique to you, it still needs to be a system, because what you want is something that you can replicate. You don't want to have to make a new decision every time you invest. You don't want to have to make a new decision every time you spend money. You want to actually make a single decision and then just apply that decision over and over again. I mean, that's how the wealthy people make so much money. They just have they've made a really good decision. They do that same decision over and over and over again. Yeah, definitely. And then, so what's in the new book, the Win-Win? It's called Win-Win. The Win-Win Wealth Strategy. Win-Win Wealth Strategy. So, and that comes out in July. So, depending on when you're listening to this, it may already be out. You can pre-order it right now. But what's in the book? So what's it talk about? So actually what we look at is 7 investments that the government will pay you to make. So we actually show you both what you would get out of putting your money into, what you could get out of it from a tax standpoint, but also what does the government get out of it? So when the government gives an incentive, they're doing this selfishly. They're not doing this to be generous. Okay. They're doing it because what people don't understand about the tax system is it's not a zero-sum game. In other words, most people think, well, if the government wins, I lose. If I win, then the government loses. Right. But that's not the way it works. When the government, if you do it right, you do what the government wants you to do, the government wins and you win. And part of that is because it requires debt. So this is something that scares people. Right. But I always tell people, if you're afraid of debt, then you don't trust the asset that you bought with the debt. Right. You don't believe it's actually going to perform for you. Right. Okay. Because people who trust the asset, they get all the debt they possibly can. Right. You know that. Yep. You're a real estate investor, so you understand that concept. Yep. Very few people really understand that. But what happens is that because you're investing the way the government wants to, the government makes money. They're just your investment partner. That's all they are. And they'll actually put the money in for you to start the business. And then when you start making money, you're going to start giving them a return on investment. Right. It's pretty simple. But there's literally 7 different areas that they all governments across the world focus on. We actually looked at 15 different countries. And so this is really a book to show you how, if you can look at this book from one of 2 ways. You can say, okay, how do I pay the least amount of tax? This is a great book for that. Right. Or make the most amount of money. Or you can look at it as, okay, well, how does the tax system actually work? Are the rich really cheating? Are they really, what's the truth? And this is a book just to expose what really happens. That's really what it does. But at the same time, you can certainly use it to make a lot more money and pay a lot less tax. We actually have a chapter in there at the end where I actually show a true example of where somebody got the government to pay for their Ferrari. Okay. Are you gonna? It's a true life example with real numbers. It's a client of mine. Is that right? They actually got the government to pay for the Ferrari. And when you read that last chapter of the book, when you read that chapter, you go, "Oh yeah, that'd work." Really? Interesting. Yep. Okay, so now I'm going to have to read the book. That's a good cliffhanger. There you go. That's a good cliffhanger for the book. I like keep me hanging, keep the cast hanging. I like the cliffhanger for the book. That's amazing. So very cool. So that comes out in July. The wealthability.com, right? Wealthability.com. Right. You can pre-order it either at Amazon or you can pre-order the book at winwinwealthstrategy.com, either one. Okay, perfect. And then is that how people also keep a hold of you or keep in touch with you? Just go to Wealthability. You said that there's Wealthability.com. Yeah, there's a button to click on and we'll talk to you. There's all sorts of resources. My first book, Tax-Free Wealth, is also a great resource.
Oh, perfect. Well, I love it. Well, I'm certainly looking forward to having you on the summit here in July, and then as things progress, as the book comes out and you hear feedback on the book, we'd love to have you come back on and update us on that. And then you have a podcast. You said I did not look.
The Wealthability Show.
Okay, and then typically,
and so I know exactly what you mean. You know, I'm the student, right? When you're doing a podcast, you're the student, and it's so much fun being a student.
Yeah. So who do you typically have on your podcast? I mean, what kind of people are you having on?
I have I have economists, and I have business leaders, and I have personal development leaders. So I have a pretty broad range, because I think that a lot of building wealth is about personal development. So I think it's a very important part of it. So what you're doing is really important.
Yeah, I agree. I agree that it's like, I agree. What I'm doing is really important, because I'm kind of a big deal. I don't know. I'm completely kidding.
I have a hat that says that. My stepdaughter gave it to me. I'm kind of a big deal.
Yeah. I've got a friend of mine that gave me something like that. But no, I think personal development is such personal, spiritual, professional, wealth. All of that development is so important to happiness. It really is. Just like you're talking about, if you want to get the maximum out of your wealth, you got to be active. If you're going to get the maximum out of yourself, you got to be active. You can't just sit on the sidelines. You can't just watch Netflix. And nothing wrong with watching Netflix, but I'm just saying you got to be active. You got to be. I think, in fact, actually, we have the founder of Netflix coming on the show, so hopefully he doesn't listen to this portion of the show. But what I'm saying is, obviously, it's all a balance. But you gotta, if you want to evolve, you gotta do something. You can't just sit on the sidelines. And so often I see people sitting on the sidelines. I'm just like, you can do this. Everybody can do this. People like you help people do this. So I really appreciate what you're doing and how you're showing up. And thank you for inspiring me today. And I know our audience will be inspired as well. So,
well, hopefully it wasn't too boring and you had some fun.
I had a ton of fun. So thank you so much. And I know we'll be seeing more of you.
Awesome. Thank you, Matt.
Thank you for being a part of the BriteVibe podcast. For more information, go to BriteVibe.com. That's BriteVibe.com. Thank you for listening.